What's up, YouTube? It's Joe Catchpollia sitting on the couch, making some money investing in fractional real estate online. As usual, today is Friday, so it's time for this week's installment of the 52-week challenge. If you haven't been following along, that's when I tell you all the fractional real estate that I bought this week, and that if you want to share with the rest of us, you can put it in the comments. You can jump in the Discord. We have a channel just for the 52-week challenge. Or you can DM me. That seems like what a lot of people like to do, but you're welcome to do any of those. And I think the more that we share strategy and talk about deals and share our due diligence, the better we're all going to be. And also, this is just to stay motivated, so we're not doing a whole lot of analysis and not actually pulling the trigger on stuff. So that's the goal of this. If you want a longer explanation, if you click on the first video in this playlist, the 52-week challenge playlist, you'll be able to see that. But so, okay, let's get started. What did I buy this week? Well, I only bought one LRO on ground floor. So one piece of a loan on here got me up to 120. That's all I'm going to say about that. I've got quite a few things that I bought this week. So, if you want to hear more about my ground floor investing, I do have a separate playlist for that. But let's see, what's next? Then I bought a whole bunch of different properties on Lofty. I think it was last week I actually put some new money on Lofty for the first time. I put a little bit more this week. I still don't love I think it's a very risky platform. So I want you to do your own due diligence before you do that. I mean, and that's the case with any of the sites that I currently invest on that I'm sharing with you. So in the description to this video, I have links to all the places where I currently invest in fractional real estate online. Like I said, do your own due diligence on all those platforms and any of the properties that you see me buying. Just because I'm buying it and I think it's a good deal doesn't mean it's a right deal for you. I also have a link to the Discord that I have set up where about 200 of us talk on a pretty regular basis, share what we're doing, share info on properties on different sites, and so you're welcome to join that as well. There's no cost. It's not a sales funnel. There's no downside other than you might end up spending a lot of time on there talking about fractional real estate investing. Okay, so back to what I'm buying. I bought a little bit more of this Umland Circle. This is a vacation rental in Jenner, California. I don't think it's a particularly good investment from a revenue to price ratio. It's not a fantastic earner. My purchase of this has just been because the market price has been so low. My average purchase is with fees around $15 on this one, and so with a par value of $50 for this. So my thought is, there's some problems. It's not currently operating. The co-owner had a backwater bill that he should have paid. Then it ended up being like $35,000 or something. So all of that, I think just led to some panic selling. And so I bought up to where I think I'll make a good return either if this sells, some point in the future, or if it sells quickly, I think I'll do fine. I think there's a good chance that the token price recovers when the property starts performing again. Either of those scenarios, I think the downside risk is lower than the potential for return, and so that's why I jumped into this one. And that's really what I'm doing. Most of my purchases on Lofty, that's what it is, right? I'm just buying what I think is severely undervalued equity. Most of them aren't necessarily ones that I think have fantastic long-term potential or great earning potential. There are some exceptions to that. I bought some of Madison Ave again, and this is 86 Madison Ave. I own some of this one and some of 90. It's again, this is one, it has been, let's see, we have had a decent yield, right? Since this started, it's 8.7% average yield. But it also, this is run by Earl, who I think is one of the, co-owners with the most integrity as far as he's just always, very straightforward. He's trying to be as transparent as possible in what's going on. His risk preference is a little higher than mine, but I've invested in several of his deals, and mostly when something like this happens, right? We get a discount. And so I'm buying in at that discount, and it's a pretty good yield when you look at it from that perspective. And again, right, sometime in the future, maybe we sell these for a profit, or or not. I mean, this is one, as long as he's continuing to operate it as a vacation rental, I have a lot of faith in his ability to do that. He's doing that for several of these Madison properties and some other ones. And so, just when there is, I'm not going to pay full price for anything ever on Lofty, because the platform risk makes me want to get a better return than average. But when I can pick up something like this at a pretty good discount to what I think the real world value is, I'm excited to do that. I bought a little bit more of the Universal Lending DAO. I was referred to as a almost 4% owner in this DAO, and so I just bought one more token, and now I am a 4% owner in this. Honestly, that wasn't the real motivation. I just had enough rent in my account to pick up one token, and they're currently selling at $35. The Universal Lending DAO is all it's doing is it holds several, has some cash in it, but it holds several loans. And so depending on how it's run is really going to depend on whether or not we make money with it. And since Pleb took over, I think he spends a lot of time on it, and it's probably a pretty thankless job for him, but I definitely think that $35 with him running it and the current portfolio of loans in there, it seems like it's going to be hard to lose, as long as he doesn't just crash out and decide that he's done with it or something. I think it's I don't know. I'm pretty happy buying into it at this price point. So it's, again, right, it's a combination of nice discount, and this one doesn't currently have a good yield, but the months where it's not yielding, it's still accumulating interest, right? Interest is owed every month. A lot of the DAOs who've borrowed from the Universal Lending DAO haven't had the money to pay it regularly. Most of them, though, do have sufficient equity that if we force a sale eventually, it will get paid back. I'm sure some of those loans will eventually go bad, but I don't think, I think the majority of them are relatively safe from not from a timing perspective. I don't think we're going to get our money back timely, but I think that they will be relatively safe, that we'll eventually get paid back on them. Most of the DAOs own the properties free and clear, and so the Universal Lending DAO debt might be the only debt often. I just noticed something. Yep, I don't have that updated. Let's see. Okay, South Solano Drive. This is one I've talked about quite a bit too. It is a multifamily property in Las Cruces, New Mexico. I think there's one commercial unit in there too. It's one that, it has a fairly decent cap rate just as is. It's one where, I wasn't buying it at $50, but at $26, which is the current market price, I think it makes a lot of sense. And it's, the big downside for this one is Ario, the co-owner, had put forward a vote to have the DAO take over payments of the mortgage. And somehow people accepted that vote. I mean, it seemed crazy to me to just be like, okay, we'll just do it. But so it's going to really hurt the yield. But it is what it is, right? It's still a fairly decent property. If we can get new debt that makes some sense, or just eventually pay off the debt, I think that there's plenty of money to be made at this price point, right? Obviously, I think anywhere near the $50 mark, I'm not interested in buying it, but I have been buying it when it dips below basically 25 is where I've been trying to pick it up. Let's see. DK Ranch. This is one, it was one of my earliest investments. I definitely think I overpaid for my initial tokens in this property. It is a short-term rental in Austin, Texas. Based on the crashing prices in Austin, Texas, it's probably has a lot less equity, than it did even when I first bought tokens. But at the discount that I've been getting it at this week, I'm pretty happy with it. I'd only picked up a little bit, and it has been yielding. It's not a fantastic yield, but it has continually put out a yield. Most months I've made a little something on it. And so this is one, I really like the Austin market. I don't have a ton of exposure to that market. It hasn't been doing great of late, but I expect that to turn around. I think that in the long run, it's a market I like to be in. This is a co-owner who is, pretty quiet on the Discord, but seems to continually, operate the property in a way that we're making some money. It seems like he's paying the mortgage, although I haven't seen the last time. I don't know that I've seen an update on that recently. Oh, actually, look at this. In Lofty Assist, you can see, yeah, we haven't gotten a statement for the mortgage in a long time. I think that's probably nobody's asked him. Maybe I should do that, right? That's one of the things that we should be doing. It's a relatively low loan to value, which is why when we get discounted tokens, I'm perfectly happy buying this, because I think if it turned out that we had to go ahead and turn around and sell this because he had stopped paying that, I think we could do so. And let's see. And the last thing, I bought some tokens in 9 Country Club Lane. This is, again, big discount from the original list price. If you watch my first video on this, I thought, it was not priced in a way that I was excited about it. I think that both Earl and I can't think of his name at the moment, but the co-owner of this were hesitant to put out projections other than what were coming from third-party sources. And I believe they're actually going to be able to do really well with this property. Apparently it's going to be on a show, I think like Staycation or something like that. I think a lot of times when properties get exposure to those types of shows, and it is a vacation rental, I expect this to do really well, right? Like, I think if they take advantage of that properly, this could turn into a fantastic investment, and it's not going to boom like that forever, right? It'll be something that will, if they catch that wave, maybe start to really put out some yield. And when the tokens go back up, I'll just sell out there. I am, and I know you can tell I'm very short-term minded when I'm investing on Lofty. Part of that is, I just feel like that, it's hard to trust the long-term survival of Lofty, right? They do a lot of things that just really worry me. They alienate their base of investors quite a bit. I think they just sort of make arbitrary decisions where they don't really think through how this is going to impact us a lot of times, or maybe they do think about it, but somehow end up thinking wrong. And so there's just, and I went through a long time trying to figure out, are they, do they just not know what they're doing, or are they, they have I don't believe it's a scam, right? I don't think there's anything that they're doing that's sort of underhanded or malicious. I think they just really don't have great business sense. And so it makes me worry about the long-term viability of the platform, which is why, one, I focus a lot on, I'm only going to invest in things that I think I'm going to make a really strong return on. And so that means I have to get a deep discount on it. And then, not putting a ton of money on, although I added a little bit more. I still think for the year, I'll have net taken more off than put on, I think. We'll see what happens by the end of the year, but definitely when I've got a few payoffs coming up, and when those happen, that money will come off probably. I don't know, I mean, they could change a few things that would really change my mind about it. But at the moment, I think that they are they don't really fully grasp all the, one, I think they don't think a lot of the problems are really their fault. I think they kind of think that they're just a victim of circumstances in a certain way, where almost every major scandal on the site was, pretty preventable by them, and not with a whole bunch of foresight. There's a lot of things that they could have done to make the DAOs more secure, to make, managing, just keeping everybody's money safe, keeping the properties run well. Like, there's just a lot of things that could have happened that didn't. And they're always like, well, you guys could have voted for that. But they set up a system in a certain way, and there's a really strong preference for the default in this world, right? And so if I come to a new platform, and I say, hey, I want to list my property, and they say, hey, this is how the people are doing it, most people aren't going to be like, oh, well, I want to change this, and this, right? They're thinking, oh, well, this is a big, there's a bunch of properties already. Nobody's telling me there's a problem. And so I think that that's kind of what, when you have the co-owners that keep doing things in the way that I think, it's just sort of financially or risk, from a risk perspective, sort of irresponsible way to run things. Obviously I'm gonna stop. I always just get on a rant about talking about Lofty. I am investing on there. I do think it's high risk, but I think I'm going to make high returns. And even if this something, the platform goes away, I still own a piece of each of these properties. Actually figuring out how to, access that ownership is that, that's going to be a difficult part, but, it's why I'm willing to take this risk. It's also not a huge portion of my net worth, right? I'm not, if my whole Lofty account went to zero, I'm not going to cry about it. And that's sort of the approach that I'm taking. I know there's some people that have a lot of money that they've put in there, or a lot of money to them, right? A big portion of their savings or their investments, and that scares me. I wouldn't do that on any of these platforms right now. If I had to pick one to put all my money on, it'd be tough, right? Like, I do really like Mogul, but they don't have they have one of the shortest track records, even though I like what they're doing quite a bit. I'd probably go to Ground Floor just because they've been around the longest. They have, it's a debt instrument, which you'd normally think of that as being a little bit lower risk. But I don't know why I'm rambling about this now. My goal was to tell you what I bought this week and ask you, hey, what did you buy this week? So why don't you jump in the comments or into the Discord? Let me know what you bought. What's your strategy? What are you thinking? What do you think about my buys? You think some of these were just stupid, right? Am I just like, am I buying discounted poop right now, right? I don't know. I can't think of there's definitely not the phrase I was looking for, but you know what I'm asking. Anyway, until next time, I'm just going to keep making mistakes so that you don't have to.